Hello, my name is Amy Kaufman. I am the mortgage originator at Health Advantage Federal Credit Union. Welcome to our first time homebuyer seminar, and I hope you find some great information. How do I know I am ready? Buying your first house is an exciting yet scary time of your life. I am not sure if anybody ever feels 100% ready, but if you have some stable employment, able to save money while you are budgeting for a house payment and other expenses that come into owning a home, I think it is time for you to explore your options. First off, I think a good thing to do is to create a monthly budget. Um, if you are paying rent, are you comfortable with the rent? Do you need a lower house payment? Are you comfortable for a little bit more? Allow additional expenses when it comes to buying your home. You're going to have utilities, but then you also need to save for maintenance items if anything were to break down owing the home. So you definitely do not want to budget yourself living paycheck to paycheck when you buy your first house. You get your credit on track. Do you know what is on your credit report? Do you know, are there any judgments, collections? Do not rely on agencies such as Credit Karma to give you a credit score. I have found in the past that Credit Karma is always way different than when we pull our 3-merged credit report. If you have had problems in the past, we do offer credit builder loans here at the credit union, and also with your premium checking account, we do have the Credit ID Protect, which does enable you to check your credit every 3 months. And that score is generally pretty accurate to what I'm going to come up with as far as a score when I pull it. Any outstanding judgments and collections, normally before you start buying a house, you want to have everything paid up to date, everything current. Make sure that you're making your payments on time. The average millennial credit score right now is a 638. We should be, as a home buyer, first-time home buyer, at least 640 or higher, especially if you want to get into something that is minimum down. Those programs normally want a higher credit score. Generally, for like 3% down, you're going to want at least to have at least a 700 credit score. Here's a few tips and tools to get ready to get yourself into a first home. Review your credit report. Again, if you have a premium checking, you can go on there. That will only give you a 1 score, but it'll give you a good indication what your score is. You could go into annualcreditreport.com. Also look at the accounts that they have as far as owing balances. Are those your accounts? And if you have accounts that are not reporting, maybe check with the institution why it is not showing up on your credit report. Continue to make your payments on time. This is very important. Late payments on credit cards, auto loan, any late payments, collections, things like that will ding your credit. Unfortunately, your credit score goes down a lot faster than when you try to bring it up after bringing everything current. Avoid consolidating and restructuring loans. When you're getting ready to buy a house, you want the least amount of hits on your credit as possible. So you don't want to rearrange your finances or anything at that time. Do it prior to starting to look for a home. Try it prior to getting pre-approval with me. You just want to make sure that you're concentrating on paying your bills on time, not having a lot of inquiries on your credit. Talk to your loan expert before switching jobs. So once I have done your pre-approval, I am basing it off of the income that you have given me. If you switch jobs after I've issued a pre-approval, it is very important to contact me depending on the type of job. If you are maybe hourly or salary, you change to like a per diem job, that is going to affect your pre-approval, and it may affect the timeline. You may have to wait a couple years when you go to something that is not a definite pay or hours per week. Stay with the same financial institution and keep your funds in the same account. It's not a good idea to start moving your money around, putting it like maybe you've got a couple different accounts, combining them. Leave them alone at this point. Any large deposits, we will have to document. So it's a lot easier at this time until you get to closing. Leave the accounts in where you've got them right now. Build, put your paychecks in them as usual, but don't be closing this account, opening this account. Try to leave your accounts the same at this point until after you close on the house. Something that will help keep your credit score up is to keep your credit card balances under 25% of the limit. The availability of credit helps drive up your credit score faster than, if you were to take out like an auto loan or a signature loan. Credit card balances and having that availability does help bring up your credit score at a quicker rate. Okay, am I ready? Where do I start? Determine the amount that you want to spend. One of the first questions that I'm going to ask you when you come in while doing your pre-approval is, what do you feel comfortable with? Do you pay rent right now? Are you comfortable with that rent? Or if maybe you're still living at home, have you done your budget? Do you have an idea what your payment, what you feel that you would be comfortable with? Another question I'm going to ask you is to determine what area you want to look in. Are you looking at Saginaw, Freeland? I'm going to kind of ask you some questions because there is a program that we have that is rural, for rural housing. So that only qualifies for certain areas. So I will ask you these questions when you come in. It's okay if you don't know definitely, but you can give me an idea. We're looking at either Bay City, Saginaw, or whatnot. Just give me an idea where you're going to be looking for a house. A lot of times when you start looking for a house, you will come into contact with real estate agents. Most agents will request a pre-approval letter from you before showing houses, which you can get from myself or I can email to them. The realtors, I cannot give them any personal information, so you would need to let them know the price range that you're shopping for. I can say, yes, you're qualified for that, but I cannot give them any personal information as far as you are pre-approved for $200,000, pre-approved for $40,000. Any amounts that you want to stay within, even though maybe you're pre-approved for $200,000, but like the payments about $150,000 is where your comfort zone is, that is something that you need to tell your realtor you want to stay around $150,000. One realtor can show you any properties within the area. You don't need to go to that listing agent particularly to show you that house. So it's always best to try to work with one agent and they can show you the various properties within the area. What to expect during the financing process. Once you have an accepted purchase agreement, you will then get a home inspection done on the property, and I'll give you a list of documentation that I'm going to need. Once we start your application after your home inspection, it goes through various phases of it. The mortgage process after I take your application is all done within our office. We do have a loan processor insight here that will take everything once I have met with you and collected all of your credit documentation. After you've signed your application to start the loan process after your home inspection, I will order the appraisal and the title work. After the appraisal and the title work is done, then it gets sent into formal underwriting for the approval. So once you make application after your home inspection, there is going to be 2 weeks or so, 2 to 3 weeks, where there's not going to be a whole lot going on. That we're just waiting for the information to come in. Once it is received, it gets sent to underwriting. From there, it gets a clear to close, and we will proceed to closing. So once you get out of underwriting to closing, that is kind of a fast pace because, of course, once you get your approval, everybody wants to close. So at that point, I'm going to want to make sure that you've got your homeowner's insurance lined up with your agent. Make sure that you talk to your realtor as far as a closing date. But there is going to be a 2 to 3 week period of time during the loan process where you're going to feel like there's nothing going on, but it's behind the scenes that we're waiting for the documentation to come in. Common terms, inspection. A home inspection is something that benefits you as the buyer. We do recommend that you have one done. It is done once you have a accepted purchase agreement. We do not require a home inspection, but we do like that you have a home inspection because it does benefit you down the road. We only require the appraisal. The appraisal is done once your inspection is done, and it's to determine that you are paying a fair market value for the house, that the house is worth what you're paying for it. Generally, the appraisal, especially on a conventional mortgage, does not call for any repairs unless it's a structural issue, maybe water in the basement, repairs to the roof, things like that. Your home inspection will go into greater detail is, okay, the furnace is clicking on, but the inspector notices something maybe the igniter is only going to last for a couple months or so on. So the inspection goes into more detail. The inspections usually take between 2 and 3 hours. That's why we highly recommend one. Homeowners insurance, when I do your pre-approval, I am just going to estimate some homeowners insurance kind of based on the price that you're looking at and credit scores. You can use whoever you want to for your home insurance. Once you have an accepted purchase agreement and did your home inspection, I'm going to have you shop for home insurance and then send me your quote. And then that's who we will contact to get the bill for payment, and we'll pay that at closing and so on. Private mortgage insurance, every type of mortgage has private mortgage insurance unless you're putting 20% down on a conventional. Here at the credit union, we do handle conventional financing as well as rural development. Rural development has an upfront mortgage insurance premium and a monthly, where conventional only has the monthly. The conventional loans, it does drop off once you've got 20% equity. We're on a rural development, they're on there for the life of the loan. So that is something that we can discuss in more detail, but all loans have that except for conventional if you put 20% down. Underwriting, that is the term that you will hear once your loan is in process. Once my processor, Jody, gathers everything, verifies your employment, verifies I have everything from you, and we get the appraisal and the title work, she will submit it to our underwriting for the formal approval. That could take anywhere from 3 to 5 days, business days, to get back. What they are doing is they are again verifying that we have everything in the file that is needed per the guidelines. And once the underwriting is done, they could come back and ask for additional information, or they could just give us a clear to close at that time. Any questions, please feel free to reach me at the office. You can either email me or give me a call, and we look forward to talking to you in the future.